Aurobindo Pharma share price under constant pressure for over 4 quarters now, with falling revenue and profitability. Known for its R&D, manufacture and sale of APIs, generic pharmaceuticals and related services, Aurobindo has been a global player, now venturing into biosimilars, vaccines and complex injectables. Investors' concern about Aurobindo Pharma arises from the fact that 5 years ago, July 2017, the price was 709 and today the price is 546. 5 years compounded annual growth rate of negative 4.2%, running for 5 years with the company to stay where we were 5 years ago. That is a sad return on investment. Aurobindo has remained an export-oriented unit. India contributes about 11% of its sales, US about 45%, Europe 34% and the balance from the rest of the world. Concern is in respect of US and European sales. US sales have been falling for the last 2 years, while Europe has shown a bit of improvement, but it is not adding up to the bottom line. That is the concern. Impacted by the price erosion in the US market and input inflation, the company has suffered quarter after quarter fall in the absolute amount of EBITDA. It has also observed EBITDA percentage falling consecutively on a continuous basis. Comparing June 20 with June 21, fall in EBITDA is to a small extent 3.5%, but the fall widens in September to 17%, bringing down the EBITDA percentage for the quarter. December quarter has a massive fall of EBITDA amount by 25%, and March quarter also has a fall of 25%, and EBITDA percentage for the quarter reaches the lowest of 16.7. That is a big challenge for Aurobindo. If we look at 5-year CAGR and the latest 1-year growth, 9.2% is the 5-year CAGR for revenue, but in the last 1 year, revenue has in fact registered a negative growth of 5%. When it comes to EBITDA, 5-year CAGR is 4.8%, while last 1 year it has fallen by almost 18%. And the major damage is in market cap, where 5-year CAGR moving market cap from 39,559 to 31,957, a fall of 4.2%, and last 1 year the fall has been massive, almost 38%, and that is a big damage. The massive fall in the market capitalization during the last 12 months started with Q4 FY21 results, followed by poor results quarter after quarter. Q1 results of August also had the impact of Cronus deal and its termination. Q2 results once again impacted the market price, followed by Q3, which also had the effect of USFDA warning letter. And when it came to Q4, there was poor results, SEBI warning letter, along with cancellation of Eugia Pharma demerger proposal involving stake sale. All put together, the company's share price reached the 52-week bottom of 503, and the bearish bottom persists without a let-up. Company's weak structure in corporate governance and capital allocation was exposed in the deal of Cronus Pharma, where the company acquired stake in a veterinary drug firm involving related parties. The corporate governance of the company was under scanner. There was hostile market reaction, and the company was forced to terminate the deal within 10 days of announcement. That was quite humiliating and damaging to the corporate governance standards of the company. Company's Hyderabad unit was inspected by USFDA in August 2021 and the report was issued. USFDA was totally upset with the follow-up actions taken by Aurobindo, and it threatened with a warning letter, and when its 50% of turnover comes from US, such a stinker will have its impact on the share prices, and that is where the market collapsed. The company had to cut a sorry figure when SEBI was quite upset with the way the company casually handled the US FDA warnings, and SEBI was also upset with the partial and inadequate disclosures in the matter made to SEBI as well as to stock exchanges. The warning letter from SEBI instructed the company to place before the board for action, and that was quite damaging both to the company and its professional management. Over a period of time, Aurobindo had raised a lot of hopes on its UGF Pharma Specialties demerger case, implying stake sale to private equity firm, but as late as first week of July, the company had to call off the stake sale due to valuation mismatch, and that is a disappointment which market will reflect upon in the share price. I am Vittal Prabhu with a weekly video on Stock Learning Simplified. Hope you will find the video useful and interesting. With all the negatives from the market front, operationally Aurobindo remains quite strong, both in terms of operational cash flow and working capital movements. Its dividend is not attractive enough but generates adequate surplus to deploy in sizable amount of fixed assets year on year. Very positive about the company is its hefty cash balance, and on the whole the company is a debt-free company, almost strong R&D, multiple manufacturing plants, and now planning to enter domestic formulations through organic or inorganic ways, and company has got inherent strengths when it comes to delivering on operations. Shareholding pattern of Aurobindo is a mixed bag. Substantial chunk of clean shares held by promoters, 44.6%, moving up by 4%, but pledged shares still remains to the extent of 7.3%, which is a persistent negative. Mutual funds have been net buyers over last 4 quarters, while FPIs have partially liquidated their holding by almost 4%. And just like mutual funds, insurance companies have been net buyers. On the whole, a positive shareholding pattern, but the risk of pledged shares persists. The placement of Aurobindo in market capitalization is not to its advantage. In terms of price earning multiple, the company is subjected to a very steep discount of over 60%, largely due to its excessive exposure to price erosion affected US market, and that is here to stay for some more time, and therefore PE alone doesn't make Aurobindo attractive enough. Hope you found the presentation on Aurobindo Pharma to your liking. You can access similar videos at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. Thank you so much for your valuable time, interest and support. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.